Bloomberg Audio Studios. Podcasts, radio, news.
Joe, the buzzword today, recession, slowing growth, other issues. Are you noticing any of that at Constellation?
No, not yet. Certainly not in power demand.
So what kind of power demand are you seeing? There's been a lot of change in terms of DeepSeek. There's been questions about how long the CapEx cycle can last for hyperscalers. What are you seeing?
We don't see an end in sight right now. We're starting to see it get rationalized. And by that, I mean, we're not seeing the same requests for data centers popping up in 5 or 6 utilities. So I think the hyperscalers are beginning to figure out where they want to go. And it's not the frenzy of activity. But in terms of the deal pace, it continues the same way we saw it last year.
And how are the deals? Like, how is it to get them done? Is it hard? Is it coming up with the structure, the money? Like, what is it?
It's not hard, but they're complicated because they're multi-billion-dollar deals, right? So we're talking about 20-year deals for power that sometimes could cost $5 or $10 billion. So like any commercial deal of that scale, it's going to take a long time to negotiate. And each time you need to do that with a new party, you have to go through all the terms and conditions again. But I think we're going to get some deals done this year.
Can you give me some hints, like in maybe areas, what kind of deals, like what kind of power?
Well, I think nuclear continues to be very attractive for the hyperscalers because it operates 24/7. It's clean, so it meets their environmental goals, and it matches up really well from a reliability standpoint.
So let's go to money then for a second.
Sure.
So coming up with the deals is very interesting, particularly the one you did with Microsoft to restart 3 Mile Island. Are your costs going up right now?
A little bit, but it's really labor inflation that we mostly see. Now, remember, we have existing nuclear plants that are already built. So a lot of the cost of the raw materials that you're seeing, potentially impacted by tariffs in the long run, but an escalation through inflation. We're not seeing much of that. Tiny bit on uranium pricing, but most of what we're seeing is labor contracting.
So are you planning for a tariff increase that we should be seeing on steel and aluminum on Wednesday, right? You would have that would have limited impact? How do you see that?
Pretty limited impact on us. It would impact replacement parts and that sort of thing, but it's going to be a de minimis impact on our budget.
And if you wind up seeing an increase, right, even in labor, how does that change then your contracts? Like, if you already said it, do you have to go back to them and say, hey, listen, we got to renegotiate, my costs are going up?
No, there's no reopeners up or down for those sorts of inflationary
So you're really
pressures.
taking on that risk then?
Sure, yeah, and we're taking it on for over a 20-year period. And that's the importance of being able to do this with nuclear, right? We know exactly what our cost structure is going to be within a range for 10 and 20 years. Harder to do with our natural gas assets, where we don't know what the price of natural gas is going to be 10 years out, or whether we're going to have a carbon tax, or what the changes in environmental regulations are going to be.
So how do you manage that risk?
Well, I think what's really difficult to do that in the case of natural gas. I think what you're doing is something that looks more like an index product that is indexed to either inflation or natural gas prices.
When you talk about the different parts of your business, how much of the CapEx that you're spending is going to new stuff, beefing up old stuff, or just replacing and making sure everything stays on track?
Yeah, so for us, Alix, we face a critical decision as to whether to relicense the nuclear plants for another 20 years. And we're facing that across the fleet. So when you say new, if we don't do this, it's going to be retired, very much like 3 Mile Island was retired. So the distinction between keeping existing open and something that's truly new is immaterial, right? If it's gone, it's gone. It's the same as if it were never built. So we are investing all of our monies to secure that fleet for the future. And we're also doing upgrades and restarts and other things like that. In terms of a percentage, to your question, I would say 90% of our spend is in the existing assets and getting them ready to run for decades to come.
So when we talk about power demand booming and increasing by multiple digits, right? I mean, 10%, 7% would be huge. How do you play that? Like, if it's not new, is it just expanding?
Well, it is expanding. A lot of our clients are interested in uprating. That's increasing the output of existing nuclear plants, and we're doing that in a number of different regions. Obviously, the restart is more limited. You had one plant there that you could turn on, and I think there might be another in the nation. And then the rest of that is going to be probably spent on renewables, storage, and natural gas for the time being, and in the fullness of time, new nuclear.
M&A for that? I know you just bought Calpine, so that really beefs up your natural gas. Nuclear is now 50% of your portfolio versus, say, 70. That was a big shift. What else is in your pipeline for that?
Well, we've got a lot on our plate. We've got a lot of food to eat. Yeah, and so this year we're going to spend making sure that we're ready to integrate Calpine and prepared for regulatory approvals at the back end of the year. But as you said, it's a big deal. And I think what we've indicated as a company is M&A is a big part of our strategy.
Mm-hmm. Yeah, yes. M&A in beefing up nuclear, natural gas, or you want to diversify
all
into
of the above. All of the above. I think storage is going to increasingly be a part of the story, so we'll look at those opportunities as well.
Everyone now wants to get into power. It is the coolest thing right now in the market. Whether you're looking at integrated utilities, regulated utilities, even energy companies, are you seeing more competition?
I think there's a lot of interest from all kinds of places. There's a lot of foreign interest in investing in the U.S. I think what people are trying to figure out is whether they too can secure longer-term contracts. I don't see people building spec power plants hoping the demand will come. So I think there's going to be a lot of interest there, but it's largely going to be fossil. It'll continue to be renewables, but it always has been renewables, and then we'll see whether they could get deals done. The hyperscalers are going to have to make some tough decisions between their own climate goals on the one hand and their growth needs. We think there are other opportunities to introduce that demand without necessarily building more emitting generation. And we think a big part of the story is curtailment, what we call demand response in the business. There's a new study out of Duke that's been making the rounds over the last 2-3 weeks that indicates we could build 71 gigawatts of data centers in the U.S. by just getting curtailment of about 0.25 of 1%.
Wow.
So it's really a peaky system where we have problems during certain hours, but overwhelmingly, I'll give you a statistic, 80% of the time we use less than 2/3 of the power in the country.
Wow.
Yeah.
Okay, so efficiency is key. We started with macro, so I want to end with macro as well. If we wind up getting inflation, if stagflation becomes an issue, if rates stay higher for longer, right? If renewables get more on the chopping block because returns are dented because of those higher rates, how does that impact how you think about your business?
Well, I think there's a lot of push-pull in all of that. What I think will be most meaningfully impacted is new generation that would otherwise come online. So I talked a moment ago about the need for long-term contracting to support the new gen that people are talking about. Everybody, there's a frenzy of activity, as you indicated, around that. But that only happens if we have growth. So that's the first thing to fall off.